Welcome back. We're chatting to Warren Ingram, a certified financial planner and director of Galileo Capital, and also Hershel Jawitz, CEO of Jawitz Properties. Looking at the property market at the moment, and one of the questions is whether it's the time to be buying in the residential market or maybe renting, and we haven't really dealt with the renting side. We'll move on to that in just a moment. Before the break though, Hershel gave a hard sell there on residential properties and why you should be buying into it. Warren, you're not convinced. Your reasons, once again, you'd rather go for the stock and spread the...
Yeah, my concern always is, I think I agree in terms of it's one of the few ways that you can borrow money to invest. And yes, I mean, borrowing money to invest is not always going to be the best strategy for most people. But I do think there are fantastic examples of people who, over many decades, have built real fortunes on property, with borrowed money. So there is definitely an argument for that. My concern is that is a small portion of people that can actually do it effectively, that can do it.
Who are those people? Who are we talking to here?
My feeling is it's people that are innately conservative with their own cash flow. In other words, they know how to manage their own money. They know how to protect themselves against unforeseen events. So, I mean, the nightmare scenario for me would be the person who's earning a good salary and decides, okay, I've paid off my house, I'm now going to borrow money to buy another property and I'm going to rent that out, and they lose their job. And they've got a bond. And then the tenant decides they lose their job, and now you're stuck. So that's the nightmare scenario, and I'm not by any case saying that that's going to happen to everybody, but it's those people that haven't catered for that kind of an event. So people that can say, right, I've got cash flow to fund a bond or two bonds, for that matter, for 6 or so months, if the worst of the worst happens, and yes, I can sell the property if that really is the situation. Those kinds of people, when they're smart and they manage their cash flow carefully, they can do it well. But we all know people don't even save. People don't manage their cash flow properly. So it's a very small portion of our population right around the world that can do it effectively at low risk. And that's my concern, is as soon as it goes against you, you've borrowed money, and now the risks are huge.
Okay, but then having said that, and Hershel, I want to flip it back to you in just a moment, but I want to stick with Warren here. Having said that, there are people around. Let's create a scenario here. Let's say that I have saved money. Let's say that I have a R1 million in an equity portfolio, and that's performing. It's ticking over. It's invested in your Satrix 40s or whatever. It's a fairly defensive portfolio. And I see a property which I think is a damn good price, and I've got a spare 50,000 rand.
Yeah.
And my property is paid off, and I go, okay, I'm going to buy that for R1 million, because if the unsaid word hits the fan, I can liquidate that R1 million to pay off the R1 million debt.
Yeah.
So I don't have any debt. Should I maybe then be looking at it from a different perspective there?
I think it becomes more viable. I mean, certainly. I think my comment to you would be that you need to at least be sure that once you've paid your transaction costs, once you've put down your deposit, you've still got the ability to pay off that bond for 6 months if you don't have a tenant.
Okay.
That would be the starting point in my mind. Why 6 months? Because it takes a while to get rid of the tenant who's not paying. It takes a while to then find a new one, and before you know it, 6 months is possible. So I think that's one aspect, and then I mean that might be a case. What I would say, as if you were, I mean, and I would say the same thing to somebody who decides to go and buy their own shares. Not a bad idea, but make sure you've done your homework. You can't just buy a property because you've seen it and your mate at the bar said this is a good one. That doesn't help you. You really have to have done your homework, and you have to treat this as if you were making a R1 million purchase, not the 50,000 rand deposit. It's a R1 million purchase, and it's a purchase you're going to make for 20 years. And then if you're happy with that and you take that kind of approach, then why not?
Okay, I'm in the market now. Yeah. You've convinced me. Warren is playing. Warren is. I'm going to call Warren my wife, okay? Because Warren is behaving like my wife right now. Okay, no, you can't do that because we haven't got that and we need that. Okay, so Warren's my wife, and you're my lover on the side.
Right.
Okay.
You want to swap? I know what
You've convinced me. What should I be looking at if I want to invest in residential property from a rental point of view? If I'm buying to rent, what are the boxes that I need to tick there?
So I think, and listen, let me just say this. I mean, whatever Warren has said about the issues around affordability, making sure that if...
Now leave my wife out of this.
Yes, right, so your wife, right.
Yeah.
So that's the starting point. You've got to say to yourself, you're in a position now where you can start to invest. You've got some disposable income, you've got some, as much as you can, some security of employment. There's now an opportunity for you to take some of your disposable income.
It's a big word.
Yeah, disposable income. Not that we're going to have to cut back and we can't do this and we can't do this and we can't afford this. And I'm not talking about luxury holidays. Those are, but you've got some disposable income that you can use to now invest. That's the first thing to do. Right. The second thing to do is you've got to start doing some of your own research in the market. And unfortunately, the residential property market, it's not shrouded in mystery, but access to real-time information is difficult. It's not like the stock market. So there's transfer data that you can get hold of. But transfer data is about sales that have taken place 3 or 4 months ago. So you need to do some of your own research, go onto websites. You need to go and talk to your local estate agent. You need to be looking at areas where, for example, there could be sustainable rental markets. So if you look at the Sandton area, for example, which is the business hub of this country, generally there's going to be a more sustainable rental market, albeit that you're going to pay more for property. So you need to have a look at what you can afford. You also need to have a look at then what kind of rentals are available and why people would rent in that area. Is it student accommodation? Is it for business purposes? Is it a corporate market, for example? So you need to do a fair amount of homework, because you don't want to end up in the scenario that your wife mentioned, where you buy a place, and I've got used to that, and for 3 or 4 months there's no tenant, or you suddenly find that the rental is not going to be 6,000 Rand a month, it's only going to be 3,500 Rand a month, and you're out of pocket for another 3 grand a month or 4 grand a month, and you can't afford it. So those are the real issues that you need to look at it from a sustainable rental point of view. Who would rent in that area? Why would they rent in that area? And then when you look at the purchase price, you need to try and factor in how much you can put down, what would your monthly repayments be, and what portion of those repayments would be set off against the rental, and what can you afford with the rest. So don't rush into it. Those are sort of the key areas to look at.
Why would you buy if you can rent? Why would I take 50,000 Rand out of my back sky, put it on the table, and be bound to a bank for the next 20 years, paying them a certain amount of money on the bricks and mortar, when I could actually just go out and for more or less the same amount of money rent, and if I don't like the place, or if I have to move tomorrow, or decide that I want to go and live in Cape Town, I could just pick up the phone and say to the landlord, cheers China, come pick up the keys, I'm out of here.
Yeah. So you're talking to someone who has done that most of his life.
Right, so talking to the right person now.
And the only reason why we ended up buying a house was because my wife wanted to work on her own garden. And
so you've got your own wife as well?
I've got my own wife.
So you're cheating on me?
Yeah, polygamous. So I mean, my view is that if you, I mean, we kind of ran a whole lot of numbers to try and see when would it make sense to rent and when would it make sense to buy on a pure doing it for yourself case. In other words, not renting it out to someone else, just when does it make sense to buy your own house. And if you take things like the transaction costs of the property, the maintenance costs and those kinds of things, then if you rent a property and you stay in that property for 8 years or longer, or as opposed to then buying the property and staying in it for 8 years or longer, it actually does make sense to buy the property. So you need to be as sure as you can be about anything that you're going to stay in one place for 8 years or longer.
Where does the 8 years come in?
Why 8 years applies is because when you've now signed a lease agreement with the landlord, he's going to put in a rental escalation. He's going to tell you every year your rent's going to go up by at least inflation. Often they don't want just an inflation increase, a little bit more than inflation. So if you look at that rent going up year after year after year, as opposed to your mortgage repayment, because remember, when you're paying back your bond, the only thing that's going to impact your bond repayment is either you putting in money or interest rates.
Okay.
So over 8 years, it's likely that your mortgage repayments will stay flat if interest rates stay flat, but your rent would have gone up year after year after year.
Okay.
After 8 years, then staying in the house, you would have spread out those transaction costs. The gurus call that amortization, but for ARPU, just spreading those costs out, then it makes sense to actually buy the house. The problem is most people don't stay nowadays. Most people don't stay in one property for 8 years. You know, the classic sort of cliche is, you know, the husband and wife get married, they have their first kid, so they buy their first house, then they have their second kid, need a bigger house, they buy another house. Then they get to retirement stage, the kids are out the house, they buy a smaller house. And all of that stuff doesn't always happen in 20-year blocks. So that's the one problem, is you need to be in that house for at least 8 years in my opinion.
What's the market doing? I suppose now's a pretty bad time to be discussing that, because I would imagine with the pressure on people from a monetary point of view and the fact that rates are low, people are not tending to make any change now. But what is the cycle? Is it less than 8 years that people are moving in and out of properties?
It's probably more or less 8 years, you know. So I think that it might just push out a little bit now. But I'd say generally 7 to 8 years is a good rule of thumb. I think the issue is this: is that, listen, you know, can you predict where you're going to be in 8 years' time?
No.
Probably not. I think that the one area, and this is specifically around a home to live in, which is very different. When you're buying a property to invest in, you invest like you're investing in shares. There's no emotion in it. You invest in it not that you're going to live in it, that someone else is going to rent it. But when you're looking at buying your own home, you know, I think that you can certainly talk about spreadsheets and running numbers, which 99% of people in this country can't run a spreadsheet on how to amortize renting versus buying. But I think that you're also looking at some of the softer factors around your own home, around the social issues, around a roof over their head, around aspirational issues. And listen, you know, without turning this away from a financial decision, you know, that kind of stuff is what roots communities. And you only have to look at what's going on in this country to understand where people don't have roots and people are living in shacks and all of the stuff that evolves out of that, and none of it is good. So, you know, the social fabric of any community anywhere around the world is rooted in land ownership and home ownership, and I don't think that you can start to discount those issues, aside from the fact that simply, why would I want to pay down your mortgage bond, irrespective of how long I amortize it over, when I can pay down my own property and build some equity up in the process?
I think what's coming out here is it's